Hey, Brian Thompson here with eXp Realty, joined as always, Matt Primrose,
New American Funding.
New American Funding. So we've been working together a long time. So some good news this last week.
Yeah,
right?
we got a lot of good data from Cromford.
Yep.
Came out with some interesting data. Obviously now there's 2026.
Right.
So I say we dive right into this, Brian.
Yeah. We start out the new year with the rates dropping below 6% for the first time since 2022. So tell us, a little bit about what that means as far as payment, affordability, things like that.
Yeah, no. So let's dive right into some of this
Okay.
info, Brian. So, for every 1% rate drop, that drops 10% off of principal and interest payment. So, what does that mean for us?
Yeah, well, this slide kind of is the foundation of everything we're going to look at. So, it is what we're talking about here is rate payment versus affordability. So, some people are going to think those two are really related, but since right now we have the ability to still go after sellers and buy the rate down, that's going to help out a little bit more with affordability for sure.
Yeah.
So,
absolutely. And that's, just guys, the rule of thumb is for every 1% drop, that reduces principal and interest payments by about 10%. So on a, $400,000 home, a 1% can mean a $250 to $400 a month. And that's real money.
Sure. And then you have people that are going to say, I want to wait until rates drop. That's why for those people, this is super important. So now let's look at where rates have actually been. So we peaked around 8% in late 2023 and then moved back into the low 6% range, which is where we are right now.
Yeah, and we recently touched right below 6% just briefly.
Yeah, and that short dip really matters because buyers don't need to have the perfect rates; they just need workable payments. So again, we're in a market where when those rates drop to 5.99% right now, and I keep stressing that because this market is going to shift, you're going to be able to go after some seller, get some concessions, and have them buy your rate down.
Yeah. And this segues us right into, Brian, just right where we're at now. So let's look at this one.
Yep. So this is where Phoenix, it gets real here because we're going to talk about some Maricopa County data.
Yeah. And these are actual principal and interest payments based on Maricopa County median sales price, assuming 10% down.
Sure. And it's also, we're going to assume when we start looking at payments that it's not including taxes and insurance as well. But you can clearly see the payment shock that started right around 2021.
Right. And prices rose fast, rates rose fast, and payments jumped faster than incomes.
Right. And then you can see on this slide here, it explains why buyers kind of feel like they've been priced out.
Right, and these lower lines show the difference between household types and reasonable affordability.
Sure.
Now, the black line is the actual payment.
Yep, and that gap you can see here widened dramatically after 2021.
And that's affordability pressure, just to clarify, not a housing crash. So that's the important thing to focus on here in this chart.
Correct, and then we're going to look at the affordability here, the Maricopa County median income. Now this part is important because incomes did not stand still.
Yeah, and married couples, as you can see here in this line, married couple households are around 126,000, families at 108, and single households obviously are much lower.
Yep, and the single households you can see here in the yellow are kind of showing the people that are renters, if you will. So more of the people in this are renting right now instead of purchasing. So the affordability does depend heavily on the household structure.
Exactly, and unfortunately, this market rewards dual incomes and planning. So
sure, yep. So as you can see here nationally, this is just not a Phoenix problem when it comes to payment versus income. So.
Yeah, Brian, this is a national problem. Not just what we're experiencing here in Phoenix. The affordability gap was 300 to 500 for years, widened to 600 to 750 in that 2019, 2021, and then corrected itself obviously in 23.
Yep, and now we're rebuilding from there. So.
Which is why rate movements matter more now than they did before.
Sure. And then this chart, kind of shows a tug of war with the national P&I payments versus the affordable payments.
And obviously, payments jump faster than incomes after 2021.
Yep. And when rates drop?
There you go. And the blue payment line, guys, that you see here compresses downward really fast.
Right. And then this is the long-term backdrop of, median annual family income in the U.S.
Right, and U.S. Family incomes have grown at about a 4.75% annual since 2014.
Yep. So the affordability does improve over time, even without massive rate drops.
Right, and that's why strategy beats waiting.
Yep.
I mean, and that's, we've kind of preached this, Brian, over and over and over again, that just, the cost of waiting, I mean, it's a huge factor.
Sure. And if you're going to wait, I would still talk to a lender and see what payments look like right now, because you and a lot of people are waiting. The people who are pre-qualified right now, ready to go, know what that payment is that they need to be able to, for affordability. Once it hits that payment, you got to go, because there's other people out there waiting right now.
And it is, and small rate drops have a big impact on payment, because we're not talking, homes in the price of, $125,000 to $200,000 anymore. We're talking $400,000 to $500,000 is your, I think the national average housing price is it was just dipped under $400,000 from what I heard. But
yep. And that's the price that's really aggressive right now. Anything 500-ish and below. I mean, there's people out there still right now. So if you are waiting for rates to drop to 5%, or you have that number, I wouldn't wait. Right now is the time that you're still going to be able to go out there and get some seller concessions and buy your rate down to where you need to go.
Right, because it's not going to last forever. And if you're waiting for perfect conditions, that it is just not going to be there. And we're getting to the point, Brian, where it's such a buyer's market in most markets now. Some, and you were looking at, within these reports of some areas that were actually, creeping into sellers markets. Yep. There's not going to be perfect conditions, and this is getting pretty close to as perfect as we get, being that most markets are a buyer's market.
Right. Yep. So any other questions about the market here? Any other questions about rate? You know who to contact here. So thank you, and see you soon.